Good morning, everyone. Wow. Hope everyone's doing well. Happy Monday to all. It is August 29th. Wow, we are going to be September by the end of this week. And we have a few things to talk about today. Not much to start the week, right? We're starting the week a little um, more bearish, right? We gapped down on Sunday, and there are reasons for that. So last week we talked about this a bit more. Geez, excuse me. On Thursday, we started the Jackson Hole Symposium, right? That ran through Thursday, Friday, and Saturday as well. On Friday, the Jackson Hole Symposium saw that we got a massive downturn in the overall markets, and there are reasons for this, right? It's economic symposium that's held in Jackson Hole, and geez, I gotta clear my throat. Apologies. And it was geez. Didn't mean to do that, but no way to pause this. And this Jackson Hole Symposium, right, as hawkish as we would have expected. Now, a lot of people did expect Jay Powell to actually go under a dovish pivot, if you will, but there was a lot of relation and a lot of comparison that was made between Jay Powell and Paul Volcker, right? This is the acting chair in 1980, known as the inflation killer, if you will. So on Friday, we saw a larger market downturn based on a few things that Powell said. All major indices were down 3 to 4% on average, sending a lot of risk off sentiment to investors. Multiple different asset classes, sectors overall, just everything took a larger downturn, and we have a further downturn, a gap lower even from Sunday into today, and prices are still trying to push to the downside. So we also have economic data that comes out on Friday, which is going to be pretty important, the non-farm payrolls. But until then, we could start muddling into that lower end, right? I don't think there's going to be too much of a catalyst to turn this thing around until we start to see that midweek to late week news that comes out. So Jay Powell, right? There was a lot of hope that we'd see a dovish pivot. A lot of people were actually betting on something like that to pivot from that aggressive policy of tightening. But we just saw a quick shutdown by Jay Powell. Restoring price stability will take some time, he said, and it's likely required a sustained period of below trend growth and a softer labor market. So, this is what he told the conference, adding that the road ahead will bring some pain to households and businesses. It's a clear message that the central bank will to forego any economic gains made during the pandemic and possibly a soft landing in order to ensure that inflation doesn't get out of control. So you pretty much pushed everything aside for inflation, right? We've seen that fairly recently, and July's increase in the target range was the second 75 basis point increase in many meetings. And I said then that another unusual large increase could be appropriate in our next meeting. So this will be in September. He also continued, we are now about halfway through the intermeeting period. Our decision at the September meeting will depend on the totality of the incoming data and evolving outlook. At some point, as the stance of monetary policy tightens further, it is likely to become appropriate to slow the pace of increases. So he's also pressing that we're probably going to see a 75 basis point hike in September. We also have about a 65% chance of that happening. We do have one major economic data point, which he is referring to. It's going to be the CPI PPI data that comes out in September just before this meeting. But overall, tightening to expect to continue for quite some time. And a lot of people are looking at this and thinking, wow, is this Paul Volcker? Right? 1980s, saying part of the equation anchoring price stability was to break the grip on inflation expectations, right? So if oil ends up creeping up into the end of the year, things like a Fed pivot and a soft landing are just going to be completely devastated. Now, he also talked about the soft landing that is probably not going to be in the cards. So we saw that restrictive monetary policy in the 1980s, and it is to note that once inflation peaks aggressively, there is a very low chance, if not no chance, that the Fed's rate hikes will have to or will. So let me get this straight. In the past, when inflation peaks aggressively and increases, the main way that we saw that subdue was the Fed's funds rate was actually higher than the inflation rate year over year. So keep that in mind. Now, I'm not saying we're going to see a 10% Fed's rate hike, Fed's Fed fund rate. Geez, that was a lot. I'm not saying we're going to see 10%, but inflation has to drop aggressively for that Fed's funds rate to actually pop above that area. So that's something that we're going to watch for. And I don't think these hikes are necessarily done. The aggressiveness, not necessarily done either. There's one more thing here to talk about the U.S. China audit deal, right? Because there's a lot of individual names that are listed from China on the U.S. exchange. Baba, JD, Baidu, right? They all dropped pretty aggressively on Friday, slipping again despite the agreement to let American auditors access New York listed Chinese firms. And the preliminary data was signed off by the SEC, the Public Company Accounting Oversight Board, the China Securities Regulatory Commission, and the Minister in Finance of the People's Republic of China. So apparently, inspectors can already be on the ground by the middle of next month to begin their inspections, if you will. And we saw a decent reversal based on this news, obviously due to that Jackson Hole. But it's going to be pretty interesting. We're probably going to get some more of that quote unquote credibility if we see this actually happening. So keep that in mind if we're trading some of these individual names today. And to start off the week, right, we got mainly everything is down across the board here. If I take a look at this market really quickly, give you guys some insight, we have a huge level here on the futures sitting at 40.32. Right, keep in mind 40.32 and 40.42. Those are going to be my two areas to see if the sellers can come in off of those zones to try to push us lower. That's what I'm going to be watching for this morning. You get above 40.42, right? You're going to probably start accepting that gap fill is looking pretty nice. I think it almost filled. Right. I think we were just like a point or two shy of that fill. But we're probably going to look for that gap fill and then target that 40.55 if we do manage to escape above that 40.40, 40.42. But I am leaning a little more to the bear side today, see if we can break that 40.20 and then to the downside, that 40.10 area to see if some more of those sellers come in on those futures. So again, leaning a little more bearish to start the week, but not going to be just blindly bearish, selling everything. It has to make sense, and we have to have those key areas where price actually transitions above, and you can't necessarily be too bearish on. So you got to keep eyes on Apple. You got to keep eyes on these major tech names, right? With Apple back below that 165, fairly bearish in that sense, right? You're accepting into a lower end distribution, which is realistically going to try to push in the 159. So that's something that we have to watch for this week. As long as Apple remains below 165, it is going to be a little harder for general prices to look for some of that upside. I think that there's some decent market maker positioning that is going to try to um, push prices back under that 405, 407 area. Sorry, I'm just moving this desk now. There's a lot of things going on. So we've been using this platform that allows us to look at the market maker positioning and how they change, especially on the short term, where we're looking at the Greeks, right? When you look at the delta and the gamma, it helps you understand what their positioning is and what their hedges look like. So 405, 407 on the SPY is a huge resistance based on market maker positioning. And to the downside, you're going to have to watch out for that 398, 397 area where I think that they could actually try to get a little sneak peek, a little buy. But until then, I am leaning a little more bearish. So I hope everyone has a great start to the week. That's what I'm watching for today. And again, start a little slower. See what the week kind of has in store for us, what kind of trend we might get on Monday, and then keep in mind we have those non-farm numbers into the end of the week on Friday. So keep that in mind. I don't that's going to be the main data point. I think there's a data point on Thursday as well. Like I think home sales, if I'm not mistaken, are on Thursday, but home sales and the non-farm data that come out midweek to the end of the week, we got to keep those in mind. I think until then, it's going to be more technical based throughout the week as we wait for those reports. And I think a lot of that technicality is still pressing a little more to the downside. So keep that in mind. Oh, thank you. You like this shirt? It's from this UK clothes brand, actually. I think it's called like Percival. I like it. But I hope everyone has an amazing start to the week. And let's see. Little bearish lean to start the week. Don't want to get overexcited about that, but let's see where the day takes us. And remember, community.tradeproacademy.com. Come check us out in our Discord community, and we'll chat there as well. Enjoy the day. Happy trading, and we'll chat tomorrow.